Hello students, I'm Vipul Mittal, and in this session I will discuss risk assessment procedures. You are the auditor, you're auditing the financial statements, and you have to assess the risk of material misstatement both at the financial statement level and at the relevant assertion level. So you perform risk assessment procedures to obtain an understanding of the entity and its environment, including its internal control. And in the process of getting that understanding, you assess risk of material misstatement. Now, what risk assessment procedures include? So risk assessment procedures include inquiries, analytical procedures, observation and inspection. This is what is specified in section 315. Your risk assessment procedures include inquiries within the entity. So you make inquiries to various people within the organization. For example, you make inquiries to IT personnel regarding various systems, regarding system changes, regarding IT controls. You make inquiries of internal audit function. So you make inquiries to internal audit function regarding risk of non-compliance with laws and regulations, any control deficiencies that they have identified. You make inquiries to marketing and sales personnel regarding marketing strategies, changes in marketing strategies, sales trends. You make inquiries to employees in accounting function. You make inquiries regarding various accounting policies they use, how appropriate those accounting policies are. You make inquiries to board of directors regarding their oversight responsibilities, regarding their oversight functions. So you make inquiries within the entity, and this you do so that you may assess the risk of material misstatement. You perform risk assessment procedures, and these procedures include analytical procedures. This involves analysis of various relationships. So you analyze various relationships. This may be between financial information or between financial and non-financial information. And you analyze these relationships so that you may identify something unusual. Is there any inconsistency? So this helps in identifying inconsistencies and unusual transactions and events. Amounts, ratios, trends. Is there anything inconsistent or unusual? When you perform analytical procedures, you're able to identify that. For example, you analyze sales trend and see that, okay, is there anything unusual? So if sales are increasing by 10% every year, but suddenly it increases by 50% or 70%, you find that this is something unusual, and this helps you in assessing risk of material misstatement regarding sales appropriately. If gross profit percentage, for example, is 20% every year, approximately 20%, but suddenly it jumps to 70%, this is something unusual. This helps in properly assessing risk of material misstatement. So you are performing risk assessment procedures so that you may assess risk of material misstatement. You are performing risk assessment procedures to obtain an understanding of the entity, its environment, its internal control. And in the process of obtaining that understanding, you are assessing risk. But what these risk assessment procedures include? Inquiries within the entity, analytical procedures, observation and inspection. Now, as part of risk assessment procedures, you perform observation and inspection. Observation and inspection of what? Entities' operations, for example. Plant facilities, various documents, records, management reports, minutes of board of directors and meetings, premises, trade journals, analyst reports, regulatory publications. You inspect a lot of things, you observe a lot of things. So you observe and inspect that you may assess the risk of material misstatement properly. You also engage in engagement team discussion. So other than inquiries within the entity, analytical procedures, observation, inspection, also engagement team discussion is an important part of risk assessment exercise. So you discuss with your team, members of your audit team regarding susceptibility of the financial statements to material misstatement. What are the various areas which are more susceptible to misstatement, where material misstatement is more likely? So experienced team members can share their insight in this discussion, and various members can give their inputs. But okay, these are the areas where there is potential for material misstatement. You perform risk assessment procedures to obtain an understanding of the entity, its environment, its internal control, so that you may assess the risk of material misstatement properly. And these risk assessment procedures include inquiries within the entity, analytical procedures, observation, inspection. And you also get into discussion with your engagement team regarding the susceptibility of the financial statements to material misstatement and the application of GAAP, whether US GAAP is properly applied or not. This helps in assessment of risk of material misstatement properly. So you perform inquiries within the entity, analytical procedures, observation, inspection, discussion with your engagement team, but you're not performing other procedures. You are not doing an external confirmation with debtors and with outside parties. Not needed at this stage, not needed for risk assessment. You are not doing vouching or tracing. You are not doing any recalculation. You are not reperforming certain tasks, like you are not reperforming bank reconciliation. All those procedures are not needed at this stage. Those procedures you perform after risk assessment. Those procedures are not performed to assess risk. But yes, if you have to assess risk, you perform risk assessment procedures, and risk assessment procedures include inquiries within the entity, analytical procedures, observation, inspection, and also discussion within the engagement team. All right, students. I hope this session was helpful. Goodbye. Take care.